Coach Nick, and I'm here with my lovely co-host, the one and only Deborah Face, your face for real estate. And it's another fantastic episode of Real Deal Property Sharks. And today we're going to talk about refinancing your home and the reasons why refinancing are important and why maybe now might be a good time to refinance. So let's get right into it, Deborah. And I'm going to let you dig in right after I give some basic layout. Yeah, like that. Okay, so here's the deal, peeps. We have historically low interest rates that we haven't seen forever. Obviously, part of the reason why we have low interest rates is because we're going through that COVID-19 time and the economy is kind of shangat, So what the government's doing is it's keeping interest rates low so that people can have greater access to money. Right. So as a result, if you bought your house years ago and your interest rate's a little higher, it might make sense to refinance your home now so that you can reduce your monthly payments. Or maybe what you want to do is you want to refinance your mortgage now, so you want to shorten the length of the mortgage. Or maybe in some instances, you might want to refinance to lengthen your payments because maybe you're having some financial hardships due to COVID-19 or whatever the case may be, and you want to stretch out the payments and have lower payments so you can refinance for a longer term. But basically, refinancing generally makes sense if you can reduce the monthly payment or if you can speed up the process of getting the loan paid off, because keep in mind, you're paying a tremendous amount of interest on those loans, okay? And the way most of these loans are designed, the bulk of the interest is paid on the front end. So most of your payments are on a sliding scale, usually with most mortgages. And the first several years, you're paying primarily interest, not principal. Okay, and it's only as you get into the older part of the loan where it starts to gradually become more principal and less interest. And then at the end of the loan, it's primarily principal and very little interest, right? So there's definitely an incentive to refinance. Interest rates are super, super duper low. I heard that some of them are as low as in the 2% mark, okay? And depending on how big your mortgage is, I mean, let's face it, every percentage point can mean hundreds and hundreds of extra dollars on your monthly mortgage payment that could be going into your pocket. So that's my angle on it. But Deborah Face, your face for real estate, she's got some interesting thoughts on this as well, right, Deborah?
Yes, so definitely it's a good idea to refinance. Also, what you can do is if you have some high credit card bills and you can't get out of that, obviously, and some of the interest rates are 25%, 35%, and if you're in trouble, then you're kind of stuck. So if you can refinance, a lot of times if you have enough equity, you could actually pay off those high credit cards. So with the amount of equity that you have built up, if you refinance and take cash out, you can pay off those bills, and then of course you're in a better situation. Also, there's another technique. Once you refinance and you get a lower interest rate and a lower payment, which makes it more comfortable for you. They used to have programs out there. I don't know if they have them anymore, but you could call your bank. I've done it in the past. What you do is say, for example, your mortgage is $2,000 a month, okay? So, and it's due on the 1st. You make the $2,000 payment on the 1st, and you add another $1,000. Now, I know you're thinking, well, I don't have an extra $1,000, but it does end up working itself out. Let me explain further. So you do your $2,000 mortgage, you give an extra $1,000, and then in 2 weeks, you pay another $1,000, and you just change the pattern that every 2 weeks you're going to pay $1,000. Now, what that does is what Nick had just explained. It speeds up the interest, the interest and the principal pattern, and so it ends up reaching the principal payment quicker, so that you're building equity quicker, you're paying your loan off quicker. And also think about it. If you get paid once a week, not once a month or twice, you're going to have, it's going to be easier to make a half a payment than a full payment at the end of the month. And for some people who maybe, they don't strategize their payments that well, and at the end of the month they get a little bit stuck because now they have to make a whole full, mortgage payment. It kind of lessens, that amount at the end of the month. So every 2 weeks you would be paying $1,000 instead of $2,000 for the whole month, okay? And what ends up happening also is I think there's at least 1 week more in a year. So you're making an extra payment, but it's the way that the money is calculated that it revs up the principal payments, and you end up just paying off your mortgage quicker. You end up having more equity, and even if and you're paying less interest in the long run. And also, if you were going to sell your house, because you might be thinking, well, I'm going to sell my house anyways, the benefit to that is you've built up more equity, so that's more money in your pocket when it comes time to sell your house. So it's definitely a good thing. The one thing that you have to do is you have to call your bank and let them know that this is what you're going to be doing, because they have to know ahead of time, or else they will not accept your extra payment and they won't apply it towards the principal. So you have to have that discussion with them.
Yeah, so that's exactly right. And again, what I was going to add, and you kind of touched upon it already, the extra payments usually are directly to the principal. So the way it basically works is you're reducing the principal, so the amount of interest that's accruing on your total balance is going to be less because the interest is running on a smaller balance. So that additional payment that you're making definitely will reduce the amount of interest that you're going to pay. And one of the things that you can also do is you can look at your closing documents from when you've bought the house or refinanced the house, and you'll be able to actually see in many instances they have a schedule that shows exactly what the payment schedules are and how they're broken down with interest and with principal. And you're going to see, like I said, that it's heavily stacked on the front end with a lot of interest. So if you can make additional payments, and absolutely do so, because they do go towards the principal, and it really shrinks the amount of interest you pay, and it means more money in your pocket. So that's a really powerful strategy. And Deborah Face, thank you very much for letting the peeps know. Our peeps need to know these things. You know what I'm saying? Absolutely. So, hey, it's Coach Nick and my beautiful co-host, the one and only Deborah Face, your face for real estate. And this was another lovely episode of Real Deal Property Sharks. We appreciate that you come and join us for these shows. It's really important to us, and we're glad to share this information with you. We hope you get a lot of benefit from it, and it's always cool to see you. So once again, we love you.